Good afternoon. Happy Wednesday. Happy Wednesday, everybody. Thank you for joining us. I've got Jennifer here. Jennifer Otto, she's a neighbor and friend of mine, and she is in mortgage lending. And I'm going to let her tell you a little bit more about herself while we wait for some people to join us.
Hi, I'm Jennifer Otto. Like she said, I've actually been in mortgage lending for about 25 years now. Kind of done all sorts of aspects from, setup to kind of working my way up and stuff. But I'm going to be transitioning out of my current support role into a origination role over the next couple of months. So I'm really excited to get to share some of that knowledge and experience with you guys. I'm also kind of a self-taught credit expert, so if you have any questions specifically related to credit and what makes it go up, what makes it go down, and anything like that, I'm definitely happy to talk to you about that too.
Awesome. Okay, so Jennifer, what we'll do is, because we know some people will be watching the replay of this, is Jennifer will we both look at the comments. If they come in, I'll send,
Absolutely.
She's got her tag, and we'll make sure we answer any questions you guys have in the comments as well if you're watching the replay. So because we like to just get right to things, Jennifer's here to talk about 5 things everybody needs to know about mortgage lending. And if you're looking for a house, someone who's looking for a house, make sure they see this video. And even if you have a mortgage, Jennifer's got some great advice she can help you with there as well. After she's done with her teach out, I'll be asking her a few questions. You guys are welcome to, like I said, ask any questions you like. And let's just get to it. Jennifer, what do you got to share with us today?
So the first thing, I'll call it a myth, I guess, is that a lot of people think when they're buying their first home that they have to put 20% down. I'm sure a lot of you, especially in the older generations, people were taught they had to put 20% down. And that's just not a thing anymore. I mean, let's be real. Most of the millennials at this point are new buyers, and how many of them have, $40,000 in a savings account to buy a $200,000 house.
We couldn't do that when we got our house. We are lucky enough that Adam was in the military, so we had a VA, so we didn't even have a down payment.
That's amazing.
Which is huge when you're trying to buy a house, because you don't have that hurdle.
And no mortgage insurance.
And no mortgage insurance, exactly.
So yeah, VA is a really great product. So just a caveat, thank you for sharing that. We are a huge VA lender in the Middle Tennessee area. We actually based out of Clarksville, our bank. So VA is kind of our bread and butter. So anybody out there with VA, we definitely know how to do that. That's actually one of the things I was going to talk about with the 20% down is the different types of loans that allow you to put a little bit down. RD, rural housing, is also another 100% loan. And a lot of people think, oh, I got to live out in the sticks. And you don't. You can actually live, especially in this area. We're in Middle Tennessee. Christiana is a rural eligible area, so like just right down the road.
Yeah, and that's a nice area.
It's a really nice area.
When I always thought rural development, I think, oh, I have to live in like the underdeveloped
Bell Buckle or Woodbury,
or in like inner city area or something like that. That's what we always thought it was. So that's exciting to know.
Yeah, so it's really great that people can get into homes with no money out of pocket. Another thing, and I know that you have people all over, so forgive me, this is specific again to Tennessee. We have a Tennessee housing development loan. Now, every state that I'm aware of has a grant or a bond program. In Alabama, they talk about bond programs. But the state will give you a grant to purchase a home.
That's insane. How would somebody go about like finding that information out?
So Tennessee Housing Development, it's THDA, the acronym T for Tennessee, H for housing, D for development, A for agency, alphabet soup in the mortgage business, like in the military. But it's just, you go to their website, thda.org, and they even help people who currently own homes who are in trouble, that are, having a hard time making their payments or whatever, not really for home improvements, but like if they're about to lose their home, it helps to catch them up. But typically you will pair a THDA loan with a normal product like an RD loan that we just talked about, or FHA. Now RD we talked about was 100% financing, but there's always closing costs. So down payment and closing costs are 2 separate things. Now THDA gives you a 5% grant towards the purchase of a home. So if you're buying a $200,000 house, they'll give you $10,000.
That's crazy,
right?
That's
to
awesome.
go towards down payment and or closing costs.
Wow.
So, it really helps for people that, may not have that down payment saved.
Yeah.
I always say, I like for people to kind of get their toe in the door. And that being a homeowner, that's a huge wealth building tool.
Oh yeah, for sure.
And if you can help people get into that home and start building that wealth, then it really is helpful for them. So the minimum down payment for conventional loans, instead of 20%, since we started talking about that, is actually 3%.
That's not bad at all.
Not bad.
No.
So on a $200,000 purchase, you're talking about $6,000.
Yeah.
And $6,000 is still a lot of money, but it's not unreachable. It's not unattainable.
You'll spend more than that furnishing your home when you buy it.
Right.
So, yeah, for sure.
And FHA has a minimum of 3.5% down payment. So that 5% grant can cover the closing costs or the down payment or a little bit of both. So THJ is a really great option for people that don't have 20% down.
Mm-hmm.
Sometimes also for those who maybe are moving from one house and are moving to another house and want to use their equity in a new home, sometimes putting 20% down isn't in their best interest. Sometimes even putting like 18% down or 19% down, they may end up with a better rate. And I know that sounds counterintuitive, but they may end up with a better rate and better payment than putting 20% down. So it's just really finding someone that you can really run the numbers with and really talk about that. And then another thing that is not really super big anymore, that used to be, everybody's heard of the 80-10-10 or the 95-15s and back before the bubble burst.
Yeah.
So you can still do those things. So you can still get like a 10% second so that you still have that 80% equity position, but you would get a little bit of help with your down payment. So that's myth number one. You don't need 20% down payment to buy a home.
Yeah, that's awesome. I always say, especially with you said that it was better to get 18% versus 20%. I feel like that's because the bank thinks you're going to pay them more money in the long run. And if you use that to your advantage, and then pay your loan off sooner, they're lost. They're thinking you're going to do this horrible thing to yourself, and really you're taking advantage of them, which I'm all about.
And two, anytime you put less than 20% down, you have to have that mortgage insurance.
Yeah.
So the bank likes the fact that they have that extra mortgage insurance in there. So you do have to pay that monthly, but it's a really, really small amount. And then you end up getting a better rate.
Okay, perfect.
So it's just kind of, you have to look at, it doesn't work in every situation. But
nothing does.
No. So do you have any other questions about that?
I'm good with that. I thought I had a train of thought and I was completely lost what it was. You were talking about that and you said something and I need to start writing this stuff down. So no, go right ahead and let's move on to the second point. If you guys have any questions as we go, please, I am checking the comments. Let us know. Excuse my phone ringing. My husband's calling my son. So we're going to give that a second. I think he picked up already, so we're good. All right, perfect. So we'll go ahead and continue.
So the next myth is that perfect credit is not required. Now, when I say perfect, I don't mean I've had a bankruptcy. I never paid any bills on time.
Yeah.
I had a car repossessed and things like that. That's not what we're talking about.
If you have that problem, you definitely need to see us.
Yes.
So we can help you get in a better position.
So perfect credit's not required. Actually, the minimum credit score for us right now is 620, and that's for conventional and FHA loans. Now, some FHA loans with some lenders, this is my disclaimer, will go down to 580. We do not, but you can find those loans out there. They have a little bit more hoops to jump through. You have to have 10% down typically, and you have to have really good rental history and things, different little pieces. But there are those options, so I just want to put that out there as well.
So let me just ask this question real quick. So a lot of times on Facebook, you'll see people advertising, I can get you in a home with no money down and like 480 or whatever it is. What kind of stuff are they talking about? Like, I want people to understand that those are not the type of people that you want to be dealing with, because they're probably not looking out for your best interest. So do you?
And it's got to be private lenders, because it's not anything in the, I hate to say government space, but the normal traditional mortgage space. There are 4 types of loans in the mortgage space: FHA, conventional, rural housing, and VA. Like, those are the only 4 types of loans. And the agencies who administer those, it's all public record. I mean, you can Google what are FHA requirements, and you can go to FHA's website, the official FHA website, and look at the actual official guidelines. So when people are doing stuff like that, they are predator lending. So it's really high interest rates. They are not actually doing anything with the agencies. And it's a term in the mortgage business. It's like an internal thing, but it's not an agency type loan. So it's definitely a very predatory type lending.
So remember this, if it looks too good to be true, it is.
Yep. And we're not going to get super deep into credit repair, but one thing I want to mention, especially since you guys help people with their debt and breaking the cycle and stuff like that, one thing you can really do to boost your credit scores is if you have credit cards, keep them at or below 25% of your credit limit. That is a huge boost in your credit score. And if you don't have a credit card, you need one. I mean, that's 30% of your total score is based on how you use revolving credit.
Yeah.
So if you don't have revolving credit, your credit score could be 30% better than what it is if you have revolving credit. It's a safe way to do that is with a secured credit card. So I'm not saying go out and get, a $20,000 Discover card or something crazy. And I'm not saying spend money you don't have, because we don't ever want to do that.
No, definitely not.
But it's a good tool to help build your credit score. Because credit scores matter. I mean, you can't rent a car without a credit score, without, credit scores matter. So that's really all I had to say about that particular thing. But perfect credit isn't required. Do you have any questions?
I don't have any questions. I just do want to kind of inject on the credit card thing a little bit. Secured credit cards are a really good way to start out, because you can get like a $200 secured credit card. You put the money up front before you get it, just if you don't know what those are, and then you can use whatever you have in their bank. It's kind of like a debit card. It's just it's on credit.
And it reports to the credit bureau.
And it reports to the credit bureaus. So with saying that, if you are someone who is a spender and who is not quite ready for credit cards yet, if you're going to do it that way. But I would suggest working on better habits before you just go out and get credit cards.
Yes.
Also, another way to boost your credit, in case you guys need to know, is they have the Experian Boost program, where they go off of what you're paying on your utility bills, which is another great way to do it. It doesn't boost it quite as much, but it is another way to boost it if you're anti-credit card, and I know a lot of our people are. We are not. We believe in smart credit usage. Yeah, as a tool. It's a tool, and that's exactly what it is. We definitely do not condone you going out and just getting all the
blowing
cards, blowing money or anything.
Going to Disney and be like, whoop, whoop,
yeah,
look at me.
Disney is not on a credit card, okay? No. All right, so yeah, absolutely. Go ahead. Anybody have any questions? I don't see any yet. All right, perfect. We'll go ahead and move on.
So one more thing. Sorry,
Okay.
just popped in my
Okay.
brain. If you go to optoutprescreen.com, that will give you about a 10 or 20 point boost if you have not done that. So if you're like right on the line and you're teetering and you're like, oh, I really want to buy a house in March, you can go to that website. It's like a legit website. And it will stop to all the junk mail that comes out in your mail and stuff like that. Now, you don't have to put your social security number on the site. It even says like in several places. But if you do, it's a little bit more effective. So just that's a really good thing. I think you have to do it like every 5 years.
Okay.
It expires after every 5 years or whatever. Now you can do like a permanent mail opt out, but you have to like mail the thing in. So if you do it electronic online, it's 5 years and comes out.
Okay. Does that look like you?
Opt out pre-screen. Yep.
Okay.
It looks funny.
It does, right? I think it's just the red.
Yeah.
I don't know. All right. I'm gonna put that
pre-screen.
the link in the comments. Hopefully it works, because it's looking really weird on this end. We're gonna try it anyway. Hopefully that's right. Yep, there we go. It popped up. So if you guys need to get out of those pre-screening offers and you want to boost your credits a little bit, there is that website for you.
Yeah. So we talked about a little bit on the first point that there are closing costs. So you have, when you're buying a house, when you're refinancing a house, anytime you do anything to buy a house or with a house and a mortgage loan, you have closing costs. It's not because the banks just want to make extra money off of you. There are literally things that go into the processing of the loan that we have to pay for, like title, appraisal, things like that. So you have 3 options when you're dealing with closing costs. One, you can pay them, right? So you used to go up to a house, $200,000 house, I want to buy this house. You have your 3% down payment, and then you have whatever is amount for closing costs. So you would pay this down payment plus closing costs, right? So it means you got to have both money. Or the seller can pay them. So you walk up to the house and you say, okay, it's $200,000. I'm going to pay you $205,000, and then you're going to pay $5,000 in closing costs. The difference in payment on that $5,000 would probably be less than $5 a month. But if you don't have the cash liquidity to pay the extra in the closing costs, it's a great way to get the seller's help. Then the seller's not penalized. On the seller side, they're selling it. It's no skin off their teeth. So it's a great way to get those closing costs paid. The third way is that your lender can pay them for you. Now, of course, there's no such thing as a free lunch, right? So it typically affects your interest rate. And just a little caveat here, if you're looking at buying new construction homes and they're like, oh, we have our in-house lender and we will pay $3,000 of your closing costs and give you a morning room and all of this. It's not free, people.
No, it's not, definitely.
So, you know, just kind of really examine that when people are like, you have to use this lender. You don't have to use that lender. That's something to kind of
yeah, and it's good to know, because we did that. We used the lender, and I mean, it didn't really hurt us. We got a great deal or whatever, but they end up selling your mortgage anyway. So, I mean, go with somebody you want to use, because that's just the best way to do it.
Somebody that's going to take care of you.
Yeah,
you know, to me, I mean, a mortgage lender should almost be like your insurance agent, someone that is going to be with you through all of the different seasons of life. When your children go off to college, oh, hey, what can we do to help you? You need to tap into some equity, or do you need to, you know, reevaluate some stuff? To go a little crazy at Christmas, which we're not going to do because we're in this group.
No, that's right.
But you know, there's different ways of, you know, really using the value of your home as an asset and as a tool also, in an overall financial plan. So you know, that's what a good lender will help you do, is really use that.
Our lender showed us how to pay off our mortgage early. Like, we never would have. That's before we even got onto the debt-free spectrum, before we even knew we wanted to. I mean, we had kind of been on it, but like, they showed us how to do that, and I was like, that's
really
awesome.
Easy.
Yeah. And so,
and it doesn't take that much more.
It really doesn't. No.
So another misnomer out there. Do you have anything on that one?
I'm good. No, I'm good.
Another misnomer is that you have to have 2 years on your current job, and you don't have to have 2 years on your current job. You call any lender, how long do I have to be on my job? 2 years. That's the common answer. You need to have 2 years of employment. So, you know, like, say you start working at this plant, and then you get an offer at this plant and you're making 50 cents more. And then you get an offer at this plant and you're making 50 cents more. And you've had 57 jobs in 2 years, but you don't have any gaps, and your income is steady or increasing. That's the thing. We want to know that you have a history of earning X number of dollars. Even if you go from making $20,000 a year to $50,000 a year in 1 year super quick, we want to know why. Did you just get a better deal? Did you get a certificate that caused you to get the, you know, so it has to make sense. It's all about, now we do look at a 2-year history, but it's not necessarily on the same job. The caveat with that is if you need commission income or bonus income or overtime income, those you do need to have received at your job for at least 12 months.
Yeah, because they're not like guaranteed income. You might not get those all the time. Also, you don't want to plan anything based off of those kinds of commissions. You want to go on a bare bones budget and bare bones for what you can afford, because, like I said, that money might not always be there. So never ever include the irregular income in your budget. Use it to pay off debt. Use it to save for things. Don't
put it in your savings account.
Put it in your savings account. Don't use it. You put it in the stock market. Whatever you want to do, don't budget with it, though.
Exactly. So the last thing that I wanted to share is that you can test drive a mortgage. If you are looking to purchase a home, let's say you want to purchase in the next 6 months. And I say test drive a mortgage is really more get pre-qualified. Talk to different lenders. Every lender is a human being, and they all have different personalities. And you may not click with some lenders. I mean, I'll be the first to admit, not everybody is my cup of tea. They don't all like me.
Everybody has their ideal customer, including mortgage lenders.
And every customer has their ideal mortgage lender. So, you know, talk to a few of them. And see who you kind of jive with. And a lot of it's based on your personality. Do you like to get super deep into the numbers and you want to know all the specifics? Or are you like, oh my God, just tell me what my payment is? So, you know, really working through that. And just kind of to touch back on what we were talking about, the builders lenders, like even your realtor will try to be like, oh, I've got this person over here. You know, you get to choose who does your mortgage loan. So don't ever feel pressured or that it has to be a certain way. You can use anybody that you want. There's not like, oh, this realtor only works with this lender. I get that question a lot. And it still like blows my mind today, but that's why I kind of thought I needed to bring that up. Is just because your lender or your realtor works with a specific lender does not mean you have to. They can work with any realtor or any lender, and any lender can work with any realtor. So just kind of don't let people strong arm you into something that if you're not really comfortable working with that person, and they don't really meet your emotional needs and they don't communicate on the style that you like, you know, find somebody that does. And a caveat to this actually came up with a friend at work. Get pre-qualified for a loan, a car loan, before you go shopping, because we see people's credit reports and the lots will pull your credit like 15 times. And I'm like, are you crazy?
We always tell people to pull their own credit first. And that way they don't have to get anything pulled until they know for sure what they want. And that way you can go in going, okay, what can you give me with this? Well, I have to pull. No, you don't. This is new. This is today. It doesn't cost you anything to pull your credit. It will hit you quite a bit if you're doing it. So pull it yourself and go and just say, hey, I'm not looking just yet, but I'd like an idea. And that way you can. But for sure, and we had a relative that had this issue, don't start buying stuff before you get a house. Like, you just need to like chill on it. Just don't, because it's gonna look bad, like you're on this big spending spree. And don't do it. So if you're looking to buy a house, make that your only purchase for a while.
I tell people all the time, we're not buying throw pillows, we're not buying furniture, we're not buying appliances, we're buying a house. Once you get those keys, the day after, not the day of, the day after. I don't care what you do. Girl, do not do it the day of or before. Actually, funny story, the house that I own in this neighborhood, I was able to purchase because the person who was building it went out and bought a van the week before closing.
I remember you telling us that story.
So like they don't build spec homes in this neighborhood. They're all custom builds. And so that house sat empty for like 3 months because the people who built it like bought a van the week before. Don't do that.
It's a shame. What's really crazy is when we bought, Adam had a different job at the time, and the guy who sold us the house, the people who I don't think they're realtors, but they work for the company or whatever, said, oh, y'all could buy 5 houses. We're like, no thanks, we're good. Pick the one. Plenty. So it's like, that's not smart advice.
Exactly.
But yeah, you know, but that's awesome. I mean, you definitely have to look for deals and take advantage of things and stuff, and do your shop around, do your research. You'll find way better deals than you would, you know, looking and then just stepping into the first thing that comes across. And that includes mortgage lending and insurance and anything else. Always shop around.
Yes, for sure. And then for people who currently own homes, if you haven't refinanced in a while, you definitely need to be talking to somebody. Rates are at a historic low.
What are they right now? Do you know?
It depends on every situation.
Like, what's the lowest rate?
The lowest that I have seen in the last 30 days is 2.875.
That is crazy.
On a 30-year fixed rate loan.
Wow. Now, that's the key, guys. This is how we talk, but this is how we paid off our house, okay? When we had our house, it was about 4%. Actually, it was like 3.7, I think is what it was on our mortgage. And we got that at the 30%, but we paid it off like we were paying a 15-year loan. And that's how you get cheaper rates. So that way, if you can't pay off your mortgage, or if you can't make that double payment, you're still okay because there's that lower payment. So that helps if you have like some tough times or Christmas or whatever. But it also helps you to pay it off faster because you have a low rate, all the interest and everything. So definitely try to go for as low a rate as you can. And that's obviously going to matter on your, you know, your credit score and all those things.
And what type of loan you get. Every loan is different. And we have what's called price level adjustment. So every different thing about your situation affects the pricing. They call it loan level pricing. So how high your credit score is, how much money you're putting down, do you have mortgage insurance, is it a gift that you're getting, is it actually your money, do you have any subordinate financing, is it a condo, is it a townhouse, is it a regular home?
It's insane how much.
There's everything goes into that. And then there's some loans that it's like, this is the rate. Like if you can breathe, this is the rate for this type of loan. So just having somebody, again, that can help you with those types of things, you know, and really look at that. But especially if you've been in your house for any length of time, if you have mortgage insurance, you know, talking to a lender can help you either figure out, can you just drop the mortgage insurance? Because under the Home Protection Act that Congress passed not too long ago, they have specific rules that if you have mortgage insurance after a specific time, they have to drop that mortgage insurance and save you that money.
Yeah.
So don't just call and ask somebody to refinance, because there's closing costs.
Yeah.
But they may, if you find a good lender who will talk you through all of your options, you may can drop that mortgage insurance and not have to refinance.
Yeah.
And it may not be worth the difference in rate. So you want a good rule of thumb for refinances is you want to save about 1 percentage point off of your current rate to make it make sense.
Yeah.
And someone needs to do a recoupment cost analysis. So if your payment now is $1,200 and your new payment's going to be $1,000, you're saving $200 a month.
Yeah.
If closing costs are $6,000, you divide 6,000 by 200. How many months is that? Does it make sense?
Yeah.
Are you going to be in the house for however many months that is?
Yes.
Or do you know you're moving next year? Then don't do it.
Yeah, definitely. We had so many people call us to have us refinance, because again, just like you're getting those credit card offers in the mail, just like you're getting, you know, those pre-screened things, they're going to do it with your mortgage too. And they're going to be like, hey, and they're going to call you on the phone and be like, what's your current rate? And I have no idea. And I did. And I was like, I have no clue. It's pretty low though. Our house is almost paid off. And they're like, oh, well, do you want to refinance? I'm like, not particularly. They're like, well, can we talk about it? I said, sure. Let's see what happens. I don't need to, but whatever. And one time I had the conversation, they're like, oh, you owe less than this much on your house? You aren't qualified anyway. I'm like, then why are you calling me? You should know this.
Right.
And so it's like, you know, it's aggravating, but it's the same kind of thing. They just kind of throw the pre-screens out there. They're salespeople just like anybody else.
They have a quota to make.
And they have a quota to make, and so they're going to call you. And so definitely, if you owe less than so much money in your house, you don't need to refinance it. Just keep paying it down. But you know, if you owe a lot and you have, like she said, you have a high rate, and you know, it makes the most sense for you financially to help unburden you, absolutely look into it. You know, you want to do the best. What you don't want to do is take out second mortgages to finance a build, or you know, please don't do that. Mine and Adam's parents have refinanced their houses so much they owed more than they originally bought the house for. And it's sad. I mean, but people don't understand that that's what you're doing to yourself. You know, they think that's how you have to do things. And you take money out of your house. Luckily, my parents have since paid off their house, thank God. But Adam's mom still owes on her house, and they've been there for over 30 years, I think.
Wow.
And, you know, and it just saddens me because people don't know any better, which is why we have this group and why we try to educate with people like you, so people know more and, you know, can go into things with eyes wide open and not just, you know, basket full of wishes.
Yeah.
Yeah.
And, you know, everybody likes the gospel of Google. And so there's so much information out there in the mortgage realm. Like, I love it when people call me and, you know, I've been doing this 25 years and they're telling me about how this is bad and that is, oh, really?
Yeah.
I didn't get that update.
Yeah.
So, you know, I mean, definitely be informed, but find someone that you trust.
Yes.
Because, you know, this is a really large investment and a large purchase, and Dr. Google isn't always right.
No.
So
yeah, do your research, but also keep an open mind. It's the best way to be.
I mean, you wouldn't go into your doctor and be like, I know this is what I have, and this is what I need treatment for.
Or maybe you would.
I need you to do surgery on this for me.
Maybe you would. I don't know.
It's the same thing. You know, it's if you're trusting someone who is an expert in their field, like, trust the person.
Yeah, that's true. Yeah, yeah, for sure. Yeah, that's funny because, you know, the WebMD.
Oh yeah, I'm sure the doctors like just roll their eyes like, oh really? You think you have a appendicitis?
I'm not gonna lie, I'm kind of bad about that.
I looked it up and I have all these symptoms.
In a previous life, I was a medical assistant, and so I have some knowledge of medical things and basics and stuff like that. But I am the last person to go to the doctor for anything. And before I do, I will look up every single symptom, every single possibility. What could be this? What could be that? And be like, all right. And then so I'll go and I'll be like, hey, these are my symptoms. This, you know, this is kind of what I looked at. And she'll tell me yes, no, whatever. And it's, you know, it's fine. But you could ask my kids. They have like any symptoms. If they're not running a fever or vomiting, they are off the door because I know they're fine, right? And so, yeah, so I definitely am not, I'm definitely one of the ones that will look up and see the things, and I'll do all of the research, because that's just how I am.
That's
but
fine.
I also do keep an open mind. Somebody tells me it's not that, you know, so you just have to kind of teeter on the balance of that one.
And too, like if you call 2 or 3 lenders, you're going to get 2 or 3 different answers. And that's too what frustrates people is they're like, so I see this online, and even online, different, you know, articles will disagree. And then you call 2 or 3 lenders that are local, and especially if you call like the Rocket Mortgage, or, you know, something like that, you're going to get a completely different answer.
Yes.
So just finding somebody that you feel comfortable with, and you know, buying a house and using a mortgage loan that you understand. Yeah. You need to understand what you're doing.
Yeah, my dad has a mortgage through, I guess he was trying to refinance through Quicken, and they were giving like all this stuff, and I was like,
wow.
I said, you know, and I told him, I was like, try to find somebody local. And I'm going to tell you guys the same thing. Look for local businesses who are literally there because of you in their area, and they wouldn't have a business if it wasn't for you. These people that are, you know, on TV and doing all this stuff, they have tons of clients. They're getting all over the place.
They're in a cubicle farm.
They're in a cubicle farm, exactly.
They do not care.
No, and they're just meeting their quotas, and they don't care about you as a person. You're not going to talk to the same person next month as you did this month.
Nope.
It's just not, it's customer service is what that is. And if you want a more personal thing, which absolutely you do with your mortgage, because that's the biggest thing you're ever going to buy is a house. That is the most expensive. It's the biggest investment you're ever going to make.
It's where you raise your children.
Raise your children. Like, it's important. And so absolutely you want to find the right realtor, the right mortgage lender, you know, the right inspector, because you don't want it to turn into a nightmare. There's so many things we can go on and on and on about this subject. But, you know, we're always trying to work with somebody local that has been in the community for a while, that has, you know, good ratings and good reviews, and that's going to be there for you in the long run, and not somebody who's like fly by night, just opened the doors yesterday. So but if nobody has any questions, I'm trying to think if I had any questions. Thank you so much for joining us.
Welcome.
This was super informative. I didn't know some of this stuff. I thought you had to have 20% down. I did know about the credit thing, but the rest of that, I was like, wow, all right, cool. If ever we buy another house, we know. Yeah, so anyway, thank you so much for joining us.
Of course, this is
it
fun.
was very, very informative, and I'm super happy about that.
And any questions, y'all, for real, like I'll answer anything.
Yeah, just put those in the chat if you have them, or message me if you're not comfortable asking them in a public space. That's okay. Message me, and I will get those to her, and we will get you an answer as quickly as we possibly can. Thank you so much for joining us. And we're going to try to do this once a month, where I'm going to bring on someone to talk about something in the personal finance realm that we don't necessarily deal with. So if you know anybody, and I just sent a message to your girl about insurance, so hopefully we'll be hearing back from her. Anybody in insurance, financial advisors, realtors, anybody in that spectrum that deals with anything to do with your money, message me. Let me know. I'd love to have them on, and I'd love to talk about things. And get you guys as much education as we possibly can, because, as I said, we're all about breaking the cycle, and we can only do that if we educate ourselves.
Exactly.
So thank you guys so much. Y'all have a wonderful night, and we'll see you later.